Good evening, everyone. Welcome to Hit the Bid here on October 5th. This is Ty Robbie here with your Week 40 Market Watch. Tonight we're going to be running through our charts and seeing what happened across these markets from the last week. Also going to be on the lookout for any potential opportunities and big news events waiting for us as we head into Week 40. So let's jump right in and get started here. First up, we got our December live cattle on the board. Pretty quiet week in the live cattle markets as we continue to see prices consolidate down here in the 230s. We did see most of last week's action spent trading between 232 and 235. We did see a brief rally attempt coming in here on Wednesday as this market did push above that 235.12 bull pivot from last week. Had a nice thing going there early as it moved up there towards that 236.5 level. However, we continue to see that spot be good resistance here as we continue to trade around that key level over the past couple months here. We can see if we zoom out over the last about 7 weeks here, we continue to see this market make good directional moves away from this 236.5 level, whether that's pushing above it here on a couple attempts or being rejected each time we get trading up towards it as we are trading below it. Either way about it, we continue to see a nice key level here at 236, and so we'll need to see the bulls continue to attack that spot as we move into Week 40. That rally attempt did fail there on Wednesday. However, on Thursday and Friday, we saw this market continue to balance out and consolidate here between 232 and 235. Bulls did finish Friday on a high note, finishing the day just off the highs there at 234.60. Nice strong finish here by the bulls. Is hoping to take them into next week with a little bit of momentum. Bulls want to see this market open and get some early bids above 235 there. That should have them attacking that 236.5 level once again. However, like we've seen, it has been a pretty key level here over the past couple weeks to months. So we want to see the bulls make a nice strong push through there and get a close above it. In the event of a close above it, we should see pretty smooth sailing back up here into the 240s and retest some of these prior highs, whether that be from September or these August highs as well at the all-time highs. Good consolidation, though, here as the bulls continue to support good accumulation down here in the low 230s. We can see this market continuing to show the buyers getting active and aggressive down here each time we trade below 233 last week. Good rejection there as the bulls made some nice aggressive climbs back out of there. Just want to see some of these prior highs get taken out and get a close above these key levels here, and should open the door to more upside and back to those all-time highs in this cattle market. At the moment here, from a defensive standpoint, we do want to see the bulls continue to defend this 50-day moving average. We do have this key level down here at 230, which is our 20-day low. Lowest price over the last 20 days is the spot we want to defend. We want to make sure that the bulls continue to keep this market held up above it. If we do see any offers coming down here below 230, we could see some selling pressure kick in and push this thing back down here towards the 215 to 220 area and offer a little bit of downside. But the bulls continue to be active and aggressive down here, so I don't really see that happening. But just want to be defensive and make sure you have some insurance just in case we do start to trade down there below 230. In the meantime, though, this big picture uptrend still remains intact. We're seeing the bulls continue to be active down here and defend all these key levels. We want to see, like I said, Friday's momentum roll over into early part of this week and see this market clear some of these key levels and head back towards those highs. And we should see these cattle prices continue to rally here as we move into the month of October. You can go down the line here. Each of our back months looking out into 2026 here, also showing good consolidation and good pushback by the bulls at some of these key levels. We can see some of these spring and summer months also really showing good support there at the 20-day average over the last couple days from last week. So good signs of accumulation looking out there into 2026. This market still has some legs in it, and we should see higher prices come from here. Just going to need to see these bulls continue to fight this battle and defend these lines, and we should see this market start to open up and head back towards those highs in the week ahead. Jumping over to the feeder market now. This market also continued to consolidate here on the 20-day moving average. The rally attempt here in the middle part of the week was a little bit stronger in the feeder market as we did see this thing push up here and make a nice rally attempt back up there into the 360s. However, we did see a nice rejection, though, pushing this market right back down towards this 20-day moving average where we continue to see support. If we look on our intraday charts, we can see a little bit more structure here. As we've seen over the last 2 weeks, this market has just traded in a nice little range here between 350 and 363. Prior week's high was up there closer to 364, but last week's high was just right there around 363. We have a nice $12 to $13 range here as this market continues to trade around. We can see 350 continues to be defended by the bulls. We haven't retested some of those prior week lows dating back to early September, which is a good sign for the feeders, showing that there's definitely some strength in this market compared to the fats. Both markets remain very strong, but feeders just being a little bit more aggressive, continuing to hold this market above that 50-day moving average, while we do see these December futures trading just above it. Bulls had a nice pushback here on Friday as well, opening up and having a nice rally there into the close, coming back to this 356 level. This will be our new bull pivot as we head into the new week. We continue to see this market over this $12 to $13 range here. Good pushback down here in the bottom third of this range, showing the bulls remaining aggressive and active down here in the low 350s. Look for them to continue buying this market up. Early bids above 356 should have this market pushing back up there towards 363, and if we're able to clear some of these prior week highs, should be pretty smooth sailing back up into the 370s, and new all-time highs start printed here soon in this feeder market. Good support here. Some defensive levels we want to be aware of here is this 349 mark, which was the prior 2-week lows. We want to continue to see the bulls be aggressive down here in the low 350s, like I said. Below 349 could push this market back right down here towards these prior 2-week lows from early to mid-September. But that 342 mark continues to be the key level to watch. That corresponds with that 230 mark on these December fats. We want to make sure that the bulls continue to hold above 349, but if they're not able to do that, we should see this 50-day moving average and 342 hold. Below 342, I'd start looking for some insurance here, as this market could start to flush back down towards the 320 to 330 area. But this big picture uptrend still remains intact. Bulls continue to hold the major moving averages and key levels here. Look for them to offer a little pushback, and if the bulls can get a nice rally here out the gate here on Monday, it could open the doors to a nice strong trend week, and we could see this market climb back towards those all-time highs. Like I said, big picture uptrend still remains intact. The momentum favors the bulls, so we should see these markets continue to climb out of here and push back up on those all-time highs. Just might need to consolidate a little bit longer here and pick up more buyers before they're able to do it. But Friday's action has us set up for a nice strong start to the week, so look for the bulls to try and take this market higher as we move into week 40. Next up, we got our December corn futures. Last week was a fairly uneventful week. We did have a nice little flush lower here, as this market did have a little fake out breakout down here below the 415 mark. At the moment, we are going to maintain a neutral bias in this corn market while we are trading above 415 and below 430. We expect to see this market continue to trade in kind of a loose, sloppy range here around this 415 to 430 mark. We did see last week a brief flush below 415. However, the bears weren't able to keep that market closed down there below it. Nice rally back up there, and over the last couple of days of the week, just finishing here in the middle of the range. So far in the evening session, we did undercut Friday's low, but this market should continue to consolidate here in the 415 to 430 mark. Look for these prices to continue range trading here, as this is a pretty comfortable area. This 430 level continues to be a key spot dating back to last year at this time. We see this market trading above it throughout all of last year and the early part of 2025. Ever since this breakdown here back in late June and July, we have seen this market continue to hold down here below 430. Bulls need to close this gap up here at 430 and get a close above it to open the doors to any potential new uptrend. They definitely have the wind in their face here and an uphill battle, so don't really look for more upside in the bulls besides this 415 to 430 area. Look for that resistance to continue to hold up here, as that has been a pretty key level over the last year or two. This market should continue trading range bound. However, if the bulls aren't able to keep this 415 mark held up, any offers down here below could open the door to back towards these contract lows. So prices should continue to consolidate and be pretty comfortable down here in the low $4 range, but we do just want to keep an eye on some of these key levels here, and any closes above or below these pivot points could open the door to a new trend. But in the meantime, look for these prices staying steady. Last week, crude oil prices saw a steady week of selling. We did open up last week up there at the range highs after Friday's rejection of that 66 level. Friday's low here was immediately broken down and just saw steady selling pressure all week long. 5 straight red days here, as we did see this market break all the way down here below these range lows at 61.5. With that finish down there, we do expect to see more downside as we head into this week. So far here in the evening session, we are trading back above it, but we'll have to wait and see how once the The day session opens up tomorrow. See how prices respond. If we do see this market flush back down here below 61.5, we should see a pretty steady bleed back down here towards the $50 range. These oil prices don't really have a whole lot of upside potential. If we do continue trading below 61.5 and these prices are accepted early this week, look for this range bound trade to continue and go back to a neutral bias. But here, as long as with that weekly close down here below 61.5, we should see the bears try and carry this market down here into the 50s. But 61.45 here will remain to be the key level to watch. And anything above it, we expect this market to remain range bound, and below it, we expect a nice slow bleed here and see this market push down here into the 50s. Next up, equity markets had a nice strong week as we did see more new all-time highs. The S&P contract pushing up there towards the $6,800 mark on this December contract. Nice strong week, pushing higher all week long. However, we did see a little bit of rejection coming in there late Friday as we did push up into those highs. However, we did close the day on Friday at those lows. At the moment, nothing too concerning. If we do see bids below Friday's low, we could see this market has come back to this 20-day moving average, where we do expect to see support continue to hold. Big picture uptrend remains intact. This market is relentless and very forgiving right now, and we expect to see these higher prices continue into the fall and the end of the year. Could see S&P 7,000 coming sooner than later, but we do just want to make sure that this market holds above Friday's low as we head into the new week, and it should be pretty smooth sailing up there towards that $7,000 mark. NASDAQ index was the weakest of the bunch here with a nice engulfing day here on Friday, so we want to make sure that the NASDAQ is able to turn this thing back around and trade above Friday's low, and it should be pretty smooth sailing. And the Dow futures was the strongest, so we had a little bit of divergence here to finish the week, with the Dow pushing up into new all-time highs while the NASDAQ was pulling back, meaning the S&P is kind of stuck there in the middle of the road. But altogether, this market remains very strong and healthy, very favorable environment for stocks. We expect to see these prices continue to climb, stay long and strong here. We do have some news events scheduled for this week. However, with the government shutdown, it remains to be seen whether or not we have them. We did see last week the non-farm numbers get delayed due to the government shutdown, so we did have some jobs numbers that were supposed to come out late last week that were pushed back into for Thursday and Friday on the 9th and 10th of the week ahead. Those are tentatively scheduled. As long as the government can get back to work, we should see those numbers come. However, if not, we might continue postponing some of these news events. We also have FOMC meeting minutes scheduled for Wednesday. However, it remains to be seen whether or not we get any of those news events. So just have to stay tuned and see what the government's up to. But if not, this market doesn't really have anything to hold it down. We expect to see these higher prices climb in these equity indexes. Look for cattle prices to continue to show good support down here in the 230s and try and get another rally attempt back towards those all-time highs. And outside of that, that's all we got for this week. And we'll catch you guys tomorrow night for closing comments. Thanks.